Now, in economic news, there have been some tapes that have been made public by an Irish newspaper that actually catch Irish bankers plotting to defraud the Irish government and, of course, the Irish taxpayers. An article from The Guardian titled "Irish Bankers Hoodwinked the Government over Bailout and Secret Recordings Show This." There's a couple of quotes here. A top banker with a financial institution that almost bankrupted Ireland boasted that he had picked the figure of 7 billion euros and told the Irish government it was needed to rescue the Anglo-Irish bank. He reportedly pulled this, as he said, out of his arse. Yeah, and that number is 7. But the reality is that actually we need more than that. This is from his recording. He says, you know, the strategy here is you pull them in, you get them in to write big checks, and then they have to have support for their money, you know. And then he goes on to say, if they say the enormity of it up front, they might decide they have a choice. You know what I mean? They might say the cost of the taxpayer is too high, but if it doesn't look big at the outset, if it looks big enough to be important, but not so big that it kind of spoils everything, then I think you have a chance. Here's some more clips.
You have the check here now for the loan.
Yeah.
That'll be the first thing I'll ask. I'm going to keep asking to take questions. When is the check arriving? We need the moolah. You have it, so you're going to give it to us. And when would that be? We'll start there.
Yeah.
And by the way, the game has changed because really the problem's now at their door.
It is, yeah. Yeah.
Because if they don't get it on Monday, they have a bank collapse.
Just some petty criminals plotting something. I mean, these two guys, their names are Bow and Drum. It sounds like an Irish folk band, but actually they're just a bunch of criminals. And what they were doing was they deliberately came up with a low ball figure for what it was going to cost to bail out this bank, knowing that they were going to pull in the Irish government. And then once the Irish government had committed, then they would reveal the full extent of the commitment that was going to be necessary, which was not 7 billion euros, but more like 30 billion euros. And we see this sort of thing has happened over and over again. This happened in the United States when we were told that it was going to be massive rioting in the streets and martial law because the banks were about to fail. And instead of bailing out the mortgagees, which they could have done with that amount of money, they could have paid off 75% of the mortgages in the U.S. Instead, all of that money went to the banks, and they continued to hold the mortgages, and they foreclosed on houses and took those houses after they were bailed out. But what we're seeing in Europe, as we see in Ireland, these bankers get the government to assume to socialize their losses. And then they come back and they say, you're now insolvent as a government, and we're going to have to enact austerity measures on taxpayers. So they socialize the losses, they privatize the profits, they use their own failure, their own greed as leverage to take over entire governments. And what we saw in Cyprus is that they went in and actually directly seized money out of people's bank accounts rather than just putting it on the general taxpayer. And now in Europe, they're starting to move to do that on a much broader basis. An article from InfoWars says, new EU plan will make every bank account in Europe vulnerable to Cyprus-style wealth confiscation. Did you actually believe that they were not going to use a precedent that they set in Cyprus? On Thursday, EU finance ministers agreed to a shocking new plan that will make every bank account in Europe vulnerable to Cyprus-style bail-ins. In other words, the wealth confiscation that we just witnessed in Cyprus will now be used as a template for future bank failures all over Europe. That means that if you have a bank account in Europe, you could wake up some morning and every penny in that account, over 100,000 euros, would be gone. The European Union spent the equivalent of a third of its economic output on saving its banks between 2008 and 2011 using taxpayer cash, but struggling to contain the crisis and, in the case of Ireland, almost bankrupting the country. But a bailout of Cyprus in March that forced losses on depositors marked a much harsher approach that can now, following the agreement on Thursday, be replicated elsewhere. Well, an even bigger destruction of wealth has been taking place gradually through regulation. You know, it was a Supreme Court judge who said the power to tax is a power to destroy. Well, that's also true of regulation. In an article from New American, the report is federal regulations cut standard of living by 75% over 56 years. They go back to 1949, and they point out in a couple of studies that the real cost of government in the United States is half again as much as the entire federal budget. It is approaching a third of the country's economic output. And the CEI said, and I love the name of this report, 10,000 commandments, 2013. That's more like I think that's maybe a conservative estimate of the regulations. But they point out that federal environmental, safety and health, and economic regulations cost hundreds of billions, perhaps trillions of dollars every year, over and above the cost of the official federal outlays that dominate the tax policy that we're debating on. Now, what they did was a couple of economists there and also at the Journal of Economic Growth went in, and rather than count the dollars, the authors took a unique approach and attempted, this is also in the article, to measure how much lower American standard of living is today compared to what it would have been if regulations had stayed at the level they were in 1949. They concluded that the average American household income would be $27,500 a month instead of the $4,400 a month that it is currently. Now, that may sound pretty amazing, but they summed this up in one more area here. They said, whatever the benefits of any kind of regulation that we get from the government, what if you had an extra $300,000, actually $330,000 they come up with per year to pay for health care, for housing, for environmental protection, and other things? If you look at what's happened with inflation, since 1949, we've lost 89% of the purchasing power of the dollar. So roughly take that down by about a factor of 10, and it's not $330,000 a year, but about $30,000 a year if we didn't have the kind of inflation we got. There's another wealth destroyer that's coming in. Well, the government is confiscating wealth for bankers. They're destroying our wealth with regulations, but they're also incentivizing businesses to hire illegals rather than American citizens. In a report from the Weekly Standard, they said 68 senators have voted to create incentives for employers to hire amnestied immigrants over U.S. citizens. The immigration bill that's passed by the Senate Thursday afternoon would give some employers a financial incentive to employ, quote, registered provisional immigrants, that is, illegal immigrants who've been granted legal status, over U.S. citizens. Now, here's the way it works. Under Obamacare, businesses with over 50 workers that employ American citizens without offering them qualifying health insurance could be subject to fines of up to $3,000 per worker. But because newly legalized immigrants wouldn't be eligible for subsidies on Obamacare exchanges until after they become citizens, which would take place at least 13 years after the Senate bill, businesses could avoid such fines by hiring the new immigrants instead. So basically, if you don't provide health care for your American citizens, you are fined $3,000 per employee. But that is waived if you hire an illegal immigrant who's been given amnesty. How's that? Now, of course, the other advantage that businesses have of hiring illegals are other taxes that have been put on for American citizens, like the Social Security tax, which the employer has to pay a matching contribution. If you're not registered, if they're not legally paying taxes, they don't have to pay that 7.5%. So there's been a long time financial disincentives for hiring Americans, especially at the lower end of the wage scale. And this is yet another one that the Senate would like to put on us. Fortunately, it looks like this is going to be a dead letter in the House, but this is what the Senate agreed to on Thursday and passed this.
The important thing about the Pro 1 filter today is that the material we use for removing fluoride and other heavy metals now will remove the latest form of fluoride called hydrofluorosilicic acid. There's no other fluoride reduction filter out there that will remove that type of fluoride. And it's extremely important because today we're hearing more and more cities are using that form of fluoride.
We've been having medication forced on us through the water system for quite a while. Most people don't realize it. Most people don't realize the negative effects of fluoride.
There's a wide range of health effects that are attributed to fluoride.
Bottom line, why should somebody get this new Pro 1 ProPure filter?
The reason to buy the Pro 1, it's an all-in-one filter. It's convenient, easy to use. It doesn't require the add-on fluoride filter. And in addition, this filter removes the latest form of fluoride called hydrofluorosilicic acid.